Thank you again for coming in such numbers. I'm amazed to see how many have been brave enough to endure an evening of economics after a long, hard day, creating the economic facts that these lectures merely seek to analyse. Tonight's lecture is the last in the main part of the series, which for the first year looking at the greatest ever world economic event. But there is, in addition, a special lecture on the 1st of May, so you may have to brave some demonstrations, and it's in the same venue, but it starts at 6 o'clock, and it's about sorting out transport in London. And I think transport economics is far too complicated to be left to transport economists, and think that actually we can do a hell of a lot better than we're doing at the moment, and if we do so, the net gain is worth about £1,000 a year to each household in London. And in these straitened times, that's not to be sneezed at. The lecture has two parts this evening. The first part is what we put on the tin, which is which economies are likely to do well and which are likely to do badly as a result of the greatest ever economic change and what happened. The second bit is a sort of an additional extra which we've thrown in for you, which is that since today's the day after George Osborne's budget, I thought we'd give you a quick bit of budget analysis and what we think it means. And we've actually got the CBR team who've been working on the budget sitting down here. The guy, Scott, who's in the corner. If you ask me any difficult questions, I'm going to pass them to him. So that's how we're going to go through this. The way I'll start is by going through what we've said, what the past lectures have covered. Then I'll move into what I call the sunset and sunrise cycles. Then I'll suggest a different classification, which is sunrise, sunset, and serendipity. And I have to thank my colleague Graham Brough, who's an ex-journalist, for this word serendipity, which I must admit I had to practice pronouncing before getting it into the lecture. And then we'll even look as far ahead as 2050 before looking at the budget. The first lecture of this series attempted to justify the title of the overall series, which is the world's greatest ever economic event, by comparing the industrialization of China and the other two-thirds of the world that's currently emerging with other major economic events. The second lecture in the series pointed out the impact on demand for energy and other commodities, minerals, food, etc., and how that meant we were likely to be stuck with high prices. The third looked at how we needed to revisit our ways of looking at the economy in the West to understand how best Western economies could cope with these really quite complicated circumstances that we're facing as we lose our monopoly of production of many sophisticated products. The fourth dealt with this in even more detail and particularly looked at the fact that currently we have a very expensive way of going about business in the West. We've got a very high cost of living. We've got a high cost of living. We pay the highest prices in the world for energy, the highest prices in the world for property, the highest prices in the world for food, and various other things like that. And the lecture looked at how we could try and make our cost of living much more competitive and therefore ratchet down our uncompetitive cost base. The fifth lecture, the last one, looked at the economic impact of China's huge savings surplus. They save 50% of GDP, and the net impact of that on the world economy, including how it had caused the financial crisis. Now, before we look at the individual nations, I'd like to postulate two models, a sunrise cycle and a sunset cycle. The sunrise cycle, which you can see up there on the screen, is of countries that are doing well. They start with abundant, cheap, well-educated labor. This enables them to keep their prices low. And remember that for much of the period of Chinese industrialization, Chinese wages were only 5% of wages in the West. And a 20-to-1 cost gap gives your exports a hell of a kickstart. But it's the next stage that's important. You've got growth in export markets, and then the low labour costs and the export sales lead to high profits, and then high investment. And this in turn means that productivity grows rapidly because you've got a big, a fast-growing capital stock encouraging higher productivity. You also have, of course, investment in things like education and skills all happening at the same time, which further boosts productivity. And the rise in productivity enables the economy to remain competitive, even as wages rise, as finally the labour surplus starts to get used up. Meanwhile, another factor is at work. Rapid growth stimulates tax revenues. So it is possible to pay for both public services and public infrastructure without resorting to heavy rates of taxation. And it's in this way that economies like Hong Kong and Singapore, who've already gone through the cycle, they have much better education, health, and infrastructure than we have in the UK. With very low rates of tax. In Hong Kong, the top tax rate is 15%. It's a very different model from what we have here. The sunrise cycle of high profits, high investment, strong productivity growth, and sustainable low taxation ends up with an economic nirvana where living standards and public services improve rapidly while a competitive edge is sustained. That's the cycle. Let me contrast with a sunset cycle. It's the opposite. High costs hit competitiveness, exports falter, growth slows. Profits and investment are squeezed, productivity stagnates, or worse. Meanwhile, high government spending leads to deficits, which are financed by ever higher taxation. But high taxes are peculiarly subject to the laws of diminishing returns. And despite high tax rates, tax revenues disappoint. Does that sound familiar? This is the model which will underpin our analysis of yesterday's UK budget. The key issue is how entrenched these models are. Those who think that the world's greatest ever economic event can be handled relatively painlessly by the West believe that the roots of the sunrise model are shallow, and that democratic pressures will relatively quickly erode it. This is essentially the view of the UK's economic establishment, the Treasury, the FT, the BBC, and the whole axis of failure, as I call them normally. But they have had an appalling track record in predicting and understanding what is going on. And that's what led first to the spending splurge, the badly mistaken economic assumptions underpinning Gordon Brown's spending splurge, and then to the forecasting errors that have undermined the coalition's attempts to deal with the budget deficit. Because the forecasts failed to show how bleak the outlook was, the coalition's budget cuts have been nowhere near the scale necessary to deal with the problem. And they've now even given up on that, as far as I can see. I guess I have a slightly unfair advantage, as I was brought up in Southeast Asia, and my experience living in the East has suggested to me that the sunrise model was much more entrenched than might be expected by someone who lacks this experience. Moreover, the examples of Singapore and Hong Kong, where I'm flying off there tomorrow, show that the sunrise model is still working strongly 50 years on from the beginning of the industrialization process, and when their GDP per capita has gone way past that in the UK. I suspect that cultural factors are at work here too, particularly Chinese cultural factors, which is one of the reasons why I think that the China is likely to be a high savings, high profit, high investment, and high productivity growth economy for many more years than the conventional wisdom in the UK suggests. Now, the consequence of all this for the sunset economies is that their challenge is all the greater. And because, as I pointed out in my third lecture, the Western economies are facing a competitive challenge and an inflationary challenge at the same time because of high and, in some cases, rising prices of raw materials. Their scope for manoeuvre is heavily constrained, and they're therefore forced to accept much lower growth, if any. And they will be forced until they implement some of the policies that we can suggest. Even then, they're going to have diminished expectations. However, the sunset cycle is not the worst you can get. There's also a misery cycle. And you get the misery cycle when the competitive wage that can be afforded to keep the economy competitive drops below the rate at which welfare payments get made. Technically, the ratio is called the replacement ratio in economic jargon. But once that happens, you're potentially in disaster zone, because you have collapsing employment and GDP, escalating deficits, financial collapse. They might put up taxes if you've got some bureaucrat imposed from Brussels on top of you. That's roughly what they've been trying to do in Italy, which just makes the cycle get even worse because it further reduces your competitiveness. That's the misery cycle. And we can see signs that prematurely some parts of Southern Europe are being pushed into it. It's not just the euro, but the euro has accelerated the process. So these are the cycles that we need to look out for. You want to be in the sunrise cycle. You want to try and avoid being in the sunset cycle, but you certainly want absolutely to avoid the misery cycle. Jim O'Neill of Goldman Sachs did the world a major service when, in 2002, he presented a paper which coined the term BRICS, Brazil, Russia, India, and China, to cover 4 economies that were moving rapidly up the world league table. He drew attention to the fact that it was not only China that was emerging, but also other economies, and that the rise in the real price of commodities and energy would mean that commodity-based economies would also benefit from this process. And the past 10 years have proved him extremely prescient. But now looking forward, the BRICS economies have less and less in common, except for one thing, which is we in Britain have particularly low shares of their import markets. We sell much less to all of them than we ought to. China is an unprecedented combination of an economic superpower and a developing economy. That's never happened in the world before. India will be an economic superpower in 20 years' time, but is not one yet. Russia looks increasingly likely to remain based on energy, commodities, and gangster capitalism, while scaring off much foreign investment. Its fortunes are likely to be based on energy and commodity prices, and it might even reach its high water mark within the next 15 years before starting to fall back. And Brazil is a mixture of an emerging economy and a commodity economy. So the BRICS group is no longer homogeneous. It also excludes economies that we ought to be taking seriously, like Korea, Taiwan, Indonesia, Turkey, possibly Nigeria and Mexico, as well as smaller high-growth economies like Sri Lanka, which could provide exciting, if niche, opportunities for investors. So we need a more sophisticated classification, which is why I've coined these three new categories. The sunrise economies use the sunrise model. They're likely to be consistently fast-growing over the coming years. The sunset economies use the sunset model and likely to be slipping down the world's economic league table. And there's a third category, which is the serendipity economies. Thank you, Mr. Bruff. That are lucky to have the primary resources that the world wants to buy, but whose fortunes will largely depend on the market prices of their prime commodity exports, and whose fortunes therefore depend not just on their own efforts, but what happens elsewhere. I call them serendipity because they are basically lucky. It's not just, it's not their hard work that's got them there. Now, every year, CBR produces a ranking of the world's largest 30 economies and prediction of where they will be in 10 years' time. We release it on Boxing Day, which is a good day to bury good news. And you don't get too much competition that day for the airwaves. The report we put out on Boxing Day 2011 had Brazil overtaking the UK, and that was illustrated in the Sun with a picture of a lady on page 2 whose dress essentially matched the picture of the lady on the page opposite. And she was at a carnival, and she left very little to the imagination. So that's how the Sun illustrated economic success. They're quite good, actually. The Australian newspapers reported this as Brazil waxes while Britain wanes. This year's report, which came out on Boxing Day 2012, actually showed that Britain had re-overtaken Brazil again, which was all quite good news. And that got pushed around very heavily, particularly by the 10 Downing Street people who got really quite excited about it and made sure that virtually every British newspaper covered it in a lot of detail. Anyway, we call this thing the World Economic League Table, or more informally, Die Welt, since Tim Ohlenberg, who produces it, is German. I'm sorry Tim can't be with us today, because otherwise I would have asked him to stand up at this point. But we have to call it that fairly quietly, because that trademark is, I think, already been taken. It's amazing how governments around the world treat this as semi-official, and now they expect it and issue press releases on the back of it. So what I'm going to do for the next part of the talk is categorize the economies in the World Economic League Table into sunrise economies, sunset economies, and serendipity economies. First, the sunrise economies. Well, they are the usual suspects: China, India, Indonesia, Korea, Mexico, Turkey, Taiwan, and Thailand. To these I'd add Nigeria. It's a huge, boisterous African economy, very much on the way up, although not yet in the top 30. And I'd also add Sri Lanka. I think Sri Lanka could probably be one of the fastest growing economies in the world now that they've dealt with their Tamil Tiger problem. It may not be in the way that any of us would have liked it to happen, but provided that they've assured peace, I would expect to see them grow remarkably rapidly. China is the sunrise economy par excellence. It's now this unique example of a superpower that remains a poor country in GDP per capita terms. China's labour force has already peaked in size and is starting to decline. China's population will start to decline within the next 10 years. So that is going to be a constraint on the rate of growth. But we still think that even with slower growth, we should see growth of GDP even in the 2020s at between 3 and 4%. We still see China on the basis of productivity growth and on the basis of high investment, continuing high investment, and obviously backed by a strong savings ratio, having a reasonably rapid rate of growth as we move on. The challenge in China is going to be introducing democracy and whether that destabilizes their economic policy. India is a latent superpower, held back by bureaucratic restrictions. Its labour force growth and the scale of international orientation, and that's just jargon for saying they speak English, are its two key advantages. Because of what will be by then its vastly larger population, Indian GDP is likely to overtake Chinese GDP around about 2050. One of the most pernicious of the bureaucratic restrictions in India is the food distribution cartel, which means that food is expensive, but farmers earn little. Fixing this is the single most important reform, and Prime Minister Manmohan Singh is trying very hard. The problem is that his own party is a traditional party of the food distribution cartel, whose power he's trying to break. So it would be like seeing if the Labour Party could break the power of the trade unions, really. Indonesia has kept below the radar for years under Sukarno. Remember him? It was a basket case, preaching fire and brimstone against the West while its economy was collapsing under incompetence and corruption. A new breed of technocrats was brought in by the military junta, who ruled the country for many years after Sukarno, and their competence has survived the move to democracy. And as a result, Indonesia is expected to enter the world's top 10 economies by 2022, and will do even better by 2050. I'll come on to that. Korea is now taking the world by storm, Gangnam style. When I had lunch recently with the minister from the Japanese embassy, we both observed that Japanese trade negotiators seem to be being active all around the world at present, and they seem to be being extremely successful at negotiating market entry. And of course, companies like Samsung, LG, Hyundai, and others are establishing themselves as major presences. I was sitting next to George Turnbull, who was managing director of British Leyland and then set up the Korean car industry, at a dinner, and he explained to me how he reckoned the system worked. He said, it all works, the Korean car industry works as an extension of national service. The NCOs become the foremen, the squaddies become the shop floor workers, and it all works with military discipline. The Korean economy definitely has momentum, and we would expect at some point that unification would give it a further boost. Now, the day after cyber attacks, that may seem far-fetched, but my sense is that North Korea is in such a bizarre situation that one day they are going to have to do a deal. It will happen on the day that the Chinese want it to. That seems to me the most obvious thing to say about this. When the Chinese decide it's more in their interest to have a united Korea than not have a united Korea, we will have a united Korea. Mexico has overtaken Brazil as the economic star of Latin America, despite the tremendous problems caused by the narcotics industry. With US states now starting to vote for legalizing marijuana, my guess is that the Mexicans will start to rethink their policies and will make an accommodation with the industry rather than fighting a war on behalf of the North Americans who don't seem to have their heart in it. So I think we could see a heavy burden taken off the back of the Mexican economy, which should further boost growth, with increasing political support from the United States that itself is becoming more Hispanic. I've got some figures on this, which I'll show later, which has already, of course, involved Mexico in the North American Free Trade Area, which is a roaring success. Turkey has the ideal deal with the EU. They're not controlled by most EU laws, but they have complete access to the EU market. So it's probably the deal we ought to be trying to get. There might be a model for us there. The issue in Turkey, I think, is increasing Islamic extremism and the potential spillover of the problems on their border. Last time I was there, about 9 months ago, it was very clear that there were potential problems spilling over from Syria. And I don't think we can assume that they will remain completely unscathed, given the instability of the area around which they operate. Taiwan will fall ever more into the Chinese power zone. The biggest risk is that at some point, if democracy at some point produces a nationalist Chinese government, that they overplay their hand and end up with a trade or even a real war over Taiwan. If they don't, Taiwan will just get gradually sucked into part of Greater China. And I'm assuming that within 50 years, you won't notice any difference. The Thai economy seems to survive despite political turmoil, but there is a risk that political uncertainty could turn the economy into something where they have sort of redistribution measures on the scale that hinders growth. There is considerable political instability there at the moment. We've had coups and counter-coups, and elections have not been entirely treated seriously. So there are difficulties there. But the Thai economy, if you draw a line through this and take account of, and ignore the effects of natural disasters like floods, does continue to move forward at a remarkable rate. Nigeria has reached the point where the middle class is now a critical mass, and now the growth rate and investment are rising quite sharply. But there is, of course, again, a risk of Islamic extremism, particularly in the north of the country. And we're already starting to see pogroms against Christians. This could tear the country apart. there are more Christians than Muslims, so this isn't a case of a Christian minority being persecuted, and this could be quite serious, though. And finally, I said I'd mention Sri Lanka. It really is an interesting case. For years, Sri Lanka has been the country that's defied most of the sort of economic rules. Basically, the economic rules show a very strong correlation between things like levels of education and levels of life expectancy and levels of GDP per capita. Sri Lanka has been the one that has been the outlier with a much lower level of GDP than would be predicted if you look at other factors. Now, the general view has been that it's been held back by the military insurgency with the Tamil Tigers. That's now ended in a fairly inglorious shootout. Even if you look back over the last 10 years, the rate of growth has averaged just under 9%. I think if you look forward, this is an economy which could treble in size in 10 years' time. So an interesting niche opportunity if you want to look for them. Now let's look at the sunset economies. I'm sorry to depress you, but they are the US, Japan, and Europe. The US has the advantage of cheap energy, but it is very dependent on whether Barack Obama's attempt to introduce Europe-style socialism succeeds. If it does, the country will eventually lose its growth dynamic. But I should warn you that it takes many decades to ruin an economy. It actually takes a remarkably long time to mess things up, particularly if the measures are introduced gradually. But the US now, for the first time in over 100 years, has higher tax rates than Canada on its border, without even the public services that the Canadians have. So it is starting to look quite an expensive place to do things. Japan is beset with a rapidly declining workforce, which will fall by about a quarter in 15 years, unless participation rates go up. Already the retirement age for men has gone up. The average retirement age for men has gone up to 70. And unless we have more older workers, and they are talking about people retiring at 75, not 70, and an increased female participation in the labour force, growth is going to be slow. And they've got debt of 200% of GDP. So that just makes life easy for them. Africa used to be the world's economic disaster zone. Now it's Europe. Now, when Africa was an economic disaster zone, at least they had the consolation that quite a lot of their problems were caused by other people and former colonial rulers and so on. Europe doesn't have that consolation. And we have made an economic disaster of our own making. Within Europe, there are some countries doing a fair bit better than others. Germany has by far the most potential and is being supported now by the fact that they're in the Eurozone. The currency, by their standards, if not by other people's standards, is relatively cheap, which means that German exports are fairly competitive. But it doesn't do the same for the other European economies. The UK has the advantage of its own currency, which we've been fairly successful in devaluing. And because we've lost influence in the world and people don't pay too much attention to us, we've got away with it. We've been frankly quite lucky to do so. We've kept below the radar. But we do have the disadvantage of having to cope with the huge debt that was run up when Gordon Brown was Chancellor and then Prime Minister. France is in a much bigger mess than the French seem to realise. They have a brilliantly effective public sector, but very high rates of taxation, and increasingly what you say about the French is what you used to say about Scandinavians, which is, where are all the famous Scandinavians, where are all the famous Swedes? The answer is not in Sweden, and that's because of taxation. Increasingly, most successful French people are leaving France. Italy is in, if I say it's in stagnation, that's a euphemism really, it's a lot worse than that. Although actually, Silvio Berlusconi did rather a good job in reducing the Italian deficits. Before his failure to keep his trousers on at critical moments damaged his credibility. Though I do actually remain rather unimpressed by the female demonstrators who thought they'd trouble him by appearing topless. I mean, that's just a good day for Berlusconi. To do that in front of a potential winner of the Nobel Prize for lechery seems to have missed the point somehow. The competitive problems in Europe are exacerbated by the euro. This is likely to overhang the economies for at least a decade and probably a generation. We've already seen what's happening in Cyprus. And there will be knock-on effects for countries like the UK that trade disproportionately with the rest of Europe. Now, let me turn to the lucky countries, the serendipity economies. Russia is critically dependent on the price of oil and gas, and to a lesser extent, other primary products. While demand for energy remains high, the economy should continue to prosper. But shale gas may damage the competitiveness of the gas industry and also may eventually bring down the price of oil. So I don't think they can count on continued long-term prosperity given complete failure of translating their energy revenues into growth in other sectors. They're scared off foreign investors very effectively by the simple techniques like shooting them. And that's not great when you're trying to encourage investor confidence. Brazil has both commodity and agricultural wealth, as well as a rapidly going industrial and service economy. It does more than page 2 of The Sun was suggesting. It is diversifying, though its economic dynamic depends on continued high prices of minerals and even more so agricultural products. Brazil's taken a great lead in genetically modified food, which has given them a bit of an advantage. Brazil would probably be the major beneficiary. I think 40% of the benefits go to Brazil if the Doha round of international trade negotiation is implemented, and there are some signs that might happen. So they've got various things looking upwards. Canada's a very exciting economy. It's used its mineral wealth well and has controlled government spending better than any other major economy. It now has lower taxes than anywhere in the US and is looking attractive for investors. And one of the most disasters have some, you can get collateral benefits as well as collateral disasters. And Canada should start to be boosted in the next decade as the Northwest Passage opens up as a trade route, at least in the summer, as a result of global warming. I pointed out at the time of the last Ashes series that the Australian economy had already doubled in size compared with the UK economy in the first decade of the 21st century, and that this economic improvement had correlated with the decline of the Australian cricket team, which was why we were winning the Ashes. This got quoted in The Australian in Canberra. However, the Australians seem to be doing their best to mess up economic prosperity. The previous government under Kevin Rudd tried to impose mining super taxes, which caused a complete chaos amongst the mining companies. He got kicked out. Actually, he got kicked out the day after the CBR report on the likely damage done by mining super taxes was circulated to Australian Parliament. It would be fun to imagine that there was cause and effect, but I suspect it's probably a bit unlikely. Funnily enough, they had another leadership election at 5:30 our time this morning. They seem to have them on about an annual basis in Australia. But Kevin said he was refusing to stand this time. But anyway, the Aussie dollar has moved from being undervalued to being overvalued. The country is still full of minerals, and if deals can be done with the Aboriginals to allow mining in what some consider to be tribal areas, and if the country can get back on working terms with the mining companies, which at the moment are demanding international arbitration agreements if they ever do any deals with the Australian government, they're so scared of Australian taxes, the prospects could still be good. When we, in the second lecture, looked at the shortage of primary commodities, we concluded that minerals were likely to be the most scarce resource. And given that, the probability is their prices will be highest in real terms moving on out from now. And that's good news for Australia. Given the current form of the Aussie cricket team, which has lost its last 3 tests to India, the last one even after losing the first day to rain, I guess there's a reasonable chance that they will continue to lose Ashes series. But I'm actually doing much more in-depth research into the issue of how economic progress relates to sporting prowess. And I'm going to give an even more detailed lecture on this subject in next year's lecture series. So watch out for that. Finally, let me come to Saudi Arabia. It's an oil-based economy. It's got oil to keep it going at a very low cost of extraction for many years to come. But it does depend on a high price for oil. Diversification is has not been terribly impressive. And in a move to try and offset the Arab Spring, there's been a massive increase in public expenditure, which means that on a cash flow basis, break-even is now nearly break-even price of oil for Saudi Arabia is nearly $90 a barrel. They've spent most of their revenues, which is a huge change. So they do need to ensure a high price, and they are at some risk that if the price falls, the economy will be more affected than in the past. Although, to be fair, they've got fairly decent reserves, which will cushion them in the short term. Now, the question is, will this change in 2050? Obviously, any view of what the world's going to be like in 2050 is subject to huge uncertainty, but we do have clients who need to look that far ahead, and any view is better than none. And actually, some of the key factors, like demographics, have surprisingly small margins of error. Others, like inflation rates, GDP growth rates, and exchange rates, of course, have huge margins of error. Our forecast for 2050 showed China and India neck and neck for the world's largest economy. The central forecast has India just overtaking China by then, but there's plenty of uncertainty. India will have a much bigger population, China higher GDP per capita. What about the US? Well, the US will be in third place. Just the nature of the numbers is virtually impossible for the US not to be in third place. But whether it's in danger of falling out of the medals table altogether will depend on the extent to which, as I said earlier, Obama's administration attempt to make the US more like Europe fails. Most people in life, they can learn from their own mistakes. Of course, the key to success is learning from other people's mistakes. And I find it amazing that the Americans, having seen what we're doing in Europe, want to make themselves more like us. I would have thought it's a no-brainer that that ain't the way to go. But it just shows a certain lack, a certain insularity and lack of perception that just as our model is showing it doesn't work, they want to copy us. Bizarre, absolutely bizarre. But it takes a very long time to wreck an economy, and they've got great advantages. Cheap energy means that the petrochemical industry is going to move to the US en masse over the next 15 years. I'll be amazed as any petrochemicals at all in Europe in 15 years' time. And most other energy-intensive industries, ceramics, a lot of the metals industries, aluminium, obviously, steel, I think they'll follow suit. Remember that at the moment, you can get energy in the US at the equivalent of $25 a barrel for oil if you get it from gas. That's the equivalent price of gas in the US. It's very cheap and is a huge incentive for various different things. There's a lot of natural dynamism in the US, and it takes a long time to kill that. I mean, you don't do it with a year of taxation. It's decades of heavy taxation before you actually change the spirit of people in that way. And, of course, the demographics of the US are changing. And the chart here shows how the Hispanics, the whites will be a minority by 2050. Hispanics will be the largest single minority other than the whites. So the US will have a changing ethnic composition. It will be much more like Latin America, and maybe much more like Latin America in terms of its dynamism. But I think the difficulty for the US is psychological. After spending most of its history as the world's #1 economy and power, this relegation just to one of 3 major economies will be quite hard for many to live with. An important part of the world's history may be shaped by how they can cope with the challenge of adjustment. We should note that the US will probably still retain much of its preeminence in military matters because of its technological superiority, although even that is not completely assured. After the US, we could see any one of Japan, Indonesia, Brazil, probably reunited Korea, and eventually Turkey. There's a reasonable chance that number 4 in the world will be Indonesia. Where will Russia be? Well, that really is critically dependent on primary product prices. If you reckon they're going to be roughly where they are currently in real terms, Russia will probably fall back relatively. If they fall, particularly if the price of oil falls in response to the increase in the supplies of unconventional energy, then Russia could actually fall back. There is a reasonable chance, a chance that none of the Western European economies will be in the top 10 by 2050. Because Europe's adopted the sunset cycle, economic growth is a hope and not even a probability. But first of all, there is a chance that the euro will fail. I've often said this before. And if it did, I think Germany would have a very different economic model. If it doesn't fail, we should probably treat the Eurozone as a single economic state, because by then it would have to be if they want to stay together. And the Eurozone as a single economy would definitely be in the world's top 10. I also think that if we move to a world where the Germans effectively were subsidizing the rest of Europe, they'd probably impose their economic policies on the rest of Europe, which would become rather less the economics of failure and rather more the economics of success. So the world's largest economies in 2050 are likely to come from China, India, the US, Japan, Indonesia, Brazil, a united Korea, Turkey, the Eurozone, Russia, and Mexico. Now, this brings us to the end of this part of the lecture. I mentioned as a special lecture, 1st of May on transport. It starts at 6 p.m. And next year's lectures will all be here and will start at the usual Gresham time of 6 p.m. They will cover a wide range of subjects, including inequality and the euro in different lectures, those two. And one of them will even ask the question, was Karl Marx right after all? Have a guess at what my view on that one is. And on that note, I end the main part. Now, let me stop speaking from script and do what I'm much more used to, which is talk about the budget. As I say, the team down below, they're the guys who analysed it with a magnifying glass, so they actually know the real story, and they will correct me if I'm wrong and answer any difficult questions you have. Now, that lists the key budget measures. What it looked like was George Osborne kept on pulling rabbits out of hats, and you tended to think, how on earth did all the sums add up? And of course the answer is that when you looked at the small print, they didn't. He put in a slush fund of a 1.4 billion allowance for what he claimed would come from reduced tax avoidance, which is the sort of thing Treasury people always put in when they can't make their sums add up. But even then, actually, he's borrowing about an extra 3 billion. So I call it Plan A plus. He has more or less given up on the idea of his fiscal virginity. There are quite a lot of interesting things, and actually most of the measures are probably quite sensible. The tragedy is they're being introduced now in 2013. Any one of these measures, if they were introduced in 2010, would be starting to have an economic impact. And it is so tragic that they misjudged their calculations so badly, they didn't think growth was a problem, and it's taken 3 years to start to do the sorts of things that they ought to be doing. They still have unrealistic expectations of a Eurozone recovery, which certainly, if you look at it from a Cypriot perspective, seem improbable. When I was in Abu Dhabi the day before yesterday, it was very clear that Middle East investors were trying to work out how to get their money out of European banks, because the idea that you might have a 10% levy suddenly imposed on you was not terribly attractive to the minds of these people. And why just 10%? You know, that's just an opening bid, perhaps. So they are seriously worried about that. Looking at the forecasts, I think the Office for Bad Predictions, or whatever they call themselves, the OBR, they're still a bit on the cheerful side if you look in the medium term, but at least their short-term forecasts look realistic for the first time. But one of the consequences of that is that we can now see not expected to be any progress in borrowing. Borrowing is actually scheduled on our numbers to be higher in 2015 than it was in 2012. So they've more or less given up on deficit reduction. As I say, George Osborne lost his fiscal virginity, and now he's going out to play around. One of the consequences of this is that we don't yet see on our forecasts, unless there's a change in policy, which I think there's going to have to be, the debt-GDP ratio slowing down, stopping going up. What it means, frankly, is the next election is quite a good election to lose. In terms of the individual measures, there's quite a sizable hike in the personal allowance. It comes in particularly in 2014-15, which noticeably reduces tax paid at the bottom end of the scale. And again, a major reduction in corporation tax. Now, had the government announced 4 years ago that the corporation tax rate was going to come down from 30% to 20%, I reckon that would have had a huge incentive impact on the British economy. But I've heard of stealth tax increases. These are stealth tax reductions. They nickel and dime, and they do a little bit each time, and they don't warn you about it in advance, and none of the moves are quite big enough. And just as stealth tax rises, you don't sort of notice them until they hit you, so with stealth tax reductions. If you're trying to get a positive economic effect, and cuts in corporation tax are one of the best ways, actually, of getting a positive economic effect, you make it bloody obvious what it is you're doing. And instead, we're having stealth tax reductions. Quite bizarre. I don't understand the logic of it at all. If they'd announced this program, said we're going to get corporation tax down, and we're going to be not that far uncompetitive with the Irish, that's what our objective is, and said so, and said it, obviously you don't get it all in one go, but this is what's happening. We would already now be getting major economic benefits as people started to shift their investment into the UK. As it is, it's a stealth tax reduction, which is not working. There's a clever idea on small business employment allowances, where for new employees, you get a 2,000 reduction in national insurance contributions, which, given that the bulk of businesses in the country are small businesses, as this chart shows, is potentially attractive to quite a lot of people. They are actually doing quite well already, but on the back of this, they should be better. There's quite a clever package to support the housing market. We think the housing market was already starting to benefit from the funding for lending scheme, but on top of that, it looks as if Help to Buy will further kick it forward. And ultimately, this will translate into house building, although it will work on the market first before it works on actual building. And we also have a new way of looking at the monetary policy, which is being encouraged to look at unconventional means. The analysis they've done suggests that influencing expectations is the most important thing to do in monetary policy. I'm not sure I completely agree with that, but that's what they think. And so the changed monetary policy remit is targeted at influencing expectations, which is why we can expect to see more and quite a lot of pre-announcements. They think they've worked in the US, and so they think it will work over here too. Now, whether we'll get the rise in interest rates that we're currently forecasting for the years beyond 2015, I don't know. I'm inclined to think that we may not even get those. Obviously, the critical issue is how this plays in the markets. Now, bond yields must go up because they are artificially depressed. But given that we're probably going to have continued monetary easing and monetary printing, I wouldn't expect them to go up that much. I think there's still going to be a score draw. I think the markets will just about give the thumbs up unless something bizarre happens from left field. So he'll probably get away with it. But what this does is say that the big fiscal problems are still to be dealt with, and are going to have to be dealt with the next government. So, as I say, my conclusion about the budget is it makes the next election a good one to lose. Now, you've all been immensely patient. I know occasionally some of you have looked at your watches, but as I sometimes say at the end of these talks, I'm glad none of you have tapped them to see if they've stopped. Thanks very much indeed.